2020 has been a roller coaster for the grain markets, starting as a pandemic-induced bear market and then turning into a demand-led bull market, especially soybeans. So what's ahead for 2021? DuWayne, Bosse, and Jim McCormick join me with the outlook, starting off with how much USDA needs to adjust soybean exports, crush, and ending stocks in the January report.
Well, right now, I guess you'd have to say demand is showing that we have to raise exports 75 million, I'd say, and crush, I'd say 10 to 15.
Jim, are we going to run out of beans?
We're not going to run out of beans, but it's going to make it very, very tight. I 100% agree with DuWayne. You're going to see the carryout drop, I think, below 100 million when it's all said and done. Will they do it all in January? Probably not. I fully believe we'll be importing beans. It's interesting. We sold some beans to Brazil. I would guess when it's all said and done, we'll be importing some beans late summer to try to bridge this gap because, plain and simple, there's just not enough beans in the world to feed this Chinese demand at the moment. And I believe that means the market's going higher because we got to knock some of that demand out of the market and essentially ration demand.
So the unknowns that we have, guys, are, first of all, how much more will China buy, especially in the February time period? And DuWayne, the other unknown is South American weather. What happens with the crop there, right?
Yeah, absolutely. I mean, I think we all know they've been just dry enough. We can probably start trimming off those record high numbers we were projecting earlier in the year. But they are getting, scattered rains every once in a while. So I don't think it's a disaster, but we can't afford a disaster right now, Michelle. And honestly, if it was this big high record number out of Brazil, like our early estimates, I wouldn't be that worried about it. And I don't think the soybean market should either. In fact, like Jim's pointing out, we need them in a demand-driven market.
So let's talk about price targets. Where do you think we need to go to start rationing demand?
I think we've got to go to $15 beans when it's all said and done. I think a minimum, when you look at stocks use falling where they are down near 3%, historically that's brought beans back up near 15, accentuating the problem, the bullishness. I'm looking at it as the US dollar. It's below the 100-month moving average for the fall, first time in multiple years. I think that just kind of gives that currency break to those importers around the world. So I think 15 is a minimum target at this point in time, unless something really tragic happens on the demand front that I'm not expecting.
Corn has to continue to follow soybeans here to bid for acres, obviously. But does corn have enough of its own demand story to kind of push that market as well?
Well, a lot of it's going to depend on China at this point in time. How many bushels of corn are China truly going to need? Our best guesstimate, at a minimum, they bought at least 19 million metric tons of corn. We've heard a lot of private estimates say they've got to buy 25 to 30 million metric tons of corn. So if China continues to buy like that, plain and simple, our carryout is going to drop, I think, below 1.5, and that will keep corn kind of in a rationing mode. I do think the beans are going to be the leader. And then we get into next spring, it's really going to be a battle for acres.
So the other side of the demand equation, DuWayne, is the ethanol industry. Basically, gas demand slowing down, which is going to slow down ethanol production. Does USDA have to make adjustments going forward on that?
I don't think right away here in this January report, we're not that far off the current projections. Yeah, the ethanol picture isn't rosy right now. That's kind of the stepchild in the supply and demand table right now, but it's not horrible. It'll be all right.
So Jim, if we do get into the corn soybean acreage battle here, how much higher do corn prices have to go to get enough acres?
Honestly, Michelle, you're asking a really hard question because it really depends on how high price beans go. I mean, if you get beans into the teens, I think beans are going to be attractive to a lot of producers.
DuWayne, your thoughts? Is there a lot more upside potential in the corn market and corn prices?
Yeah, there is. And Jim nailed it because of sharply higher soybean market, corn will follow. Now, when it comes to the corn market, I'm not nearly as bullish as I am soybeans. The stock to use ratio is tight, but it's just not as tight as soybeans. I would target, once we got up to this 440 in March corn, I started scale up selling from there, the old crop. And as far as the new crop goes, I'm anywhere from that same 420 area where you start to sell it. I would scale up selling to that 475, 474 area as a producer, just because I don't think right now we're in a situation where we're going to have to ration demand.
So let's talk about the wheat market. There's not much of a story right now because the Northern Hemisphere's crop is pretty much in dormancy. So what do you see ahead here? Is just wheat a follower of corn and soybeans for the next couple months?
I see wheat as being a follower. You nailed it with once wheat goes into dormancy in the Northern Hemisphere, that bullish story kind of went away that Russia's got a poor crop.
Any price targets or projections for wheat?
I think you can probably see maybe go 50 cents higher, maybe a little bit higher. It's going to struggle, like DuWayne said. it's gonna be the laggard throughout the winter. We're gonna follow the beans and then the corn and then the wheat. But the spring wheat, it's gonna have a battle for acres. So I would look for the wheat market to continue to find a little bit of strength.